everyone, I'm Sarah Martin, the Associate Director of Forecasting at Dodge Construction Network, and today we will be looking at November's Momentum Index. Now, as a reminder, the DMI tracks the value of non-residential building projects as they enter planning. All those projects are valued under $500 billion, and they tend to lead construction spending by about 12 months on average. So the Momentum Index fell back about 2.3% in November to a reading of 191.5. The commercial segment fell 4.6%, while the institutional segment grew 2.5%. Now, this is the third consecutive month of decline for the DMI, and there's likely a few things influencing this month's pullback. Throughout 2024, we saw robust growth in non-residential planning, but labor shortages and high construction costs have prevented those projects from moving through the planning process at a normal pace. So it's that accumulation or that backlog in planning projects that could be constraining demand for new projects, especially on the commercial side of the market. In the back half of November, owners and developers have also begun weighing increased uncertainty over potential new tariff and immigration policies under the Trump administration. So that could be generating a little bit of pause right now, but it's a little too early to tell if that's the primary factor going on here. Now, looking at each portion of the index, you can see commercials on the left and institutional on the right. We also broke out our commercial portion of the index, removing data centers to see kind of what that trend looks like. So data centers continue to enter planning at a pretty strong clip, and they're dominating large project activity per usual. But that growth rate is normalizing. It's coming back down to earth. That momentum is stabilizing. And so with that, we're seeing the index kind of decelerate as a result. But data centers aren't the only reason we're seeing declines on the commercial side of the index. This month, we saw slower planning activity for offices, warehouses, and retail stores. And as you can see, they've been losing some steam over the past 3 months. On the institutional side, stronger growth in education planning really informed much of the 2.5% growth that we saw. And generally speaking, this side of the index has been doing a bit better. It's been growing in 5 of the last 6 months and has been a little bit more flatter, slightly more positive in 2024 in comparison to the commercial side. So in November, the DMI was 12% higher than year-ago levels. The commercial segment was up 13% from November 2023, while the institutional segment was up 8% over the same period. If we were to take out those data center projects, commercial planning would be down 6% from year-ago levels, and the entire DMI would be down 1%. So as we move into late 2025, early 2026, the impact, the cumulative impact of the Fed's rate cuts should begin to allow those planning projects to move through the planning process a little bit more quickly. That backlog should get a bit better, and we should see stronger non-residential activity in late 2025, early 2026. Now, all of that is assuming that inflation stays under control, that lending standards continue to ease, and we don't see any sort of market worsening in construction costs or labor shortages as well. And that about wraps it up. Thanks so much for watching.